Welcome to TradeTheNBI.com. This is Jonas Reporters for the 26th. And well, we had that nice little power move, new highs, the anticipation for GDP. Now, of course, whatever it comes in at is probably going to be a disappointment post-move, unless it's just absolutely beyond belief. But that's okay. Right now, the market's suffering a little bit of a decline off the Facebook drama. It's just a catastrophe. It's the end of the world, and yet we're not even really down because we're higher than we were before. So that means a whole lot of nothing. But you can see still cyan, if we just look straight to the readings, positive extreme on that move, which means what? Yes, this low will get revisited, and that would be a 2814 level from 36. Pretty decent. There's got to be an impetus, and that would be the beginning of something like this, where the orange continuing to rise moves above steel. The only difference is you don't have cyan in there to create what we refer to as that snake tongue, where the cyan becomes the tongue coming through. That would indicate soft point. Particularly interesting is that it's coming right as the Azure is starting to rise. You see, last time Azure rose is when it flattens out, is when it becomes a concern. And particularly on a daily, it takes a little bit of time, but that's usually the start of that rolling over. Not a given yet, but just something to pay attention to. The weaker NASDAQ has been prevalent all along here with the shakeout. You can see a much more dramatically improved shakeout on the S&P, and not so much on the NASDAQ here. We have the same orange crossover, and as long as it's rising, that's usually the soft point within that bull setup, but certainly something as important as Facebook struggling or any of the others. But of course, you're going to get the other ones. One will do well, one won't do so well. It's not really that big a concern unless you're individually in each of them. And of course, that euro, now that the trade issue has been resolved the other day, certainly is going to add some stability. There's just this maintained belief that the euro is just way undervalued at this level of 117, which is very interesting, because if you improve trade with the United States, it's pretty hard to justify the euro rising, because they won't win that trade deal. Go figure. And for treasuries, again, this is going to continue. It should continue to suffer. Of course, it's putting in a decent configuration here, only you don't have orange dipping below red yet, but you certainly are coming off that low dip right here below the ABM. Might need to retrace that just a little bit right to the lows before making any bounce, but that would be an indication that there's a projection of some kind of slow off, or that the articles you read about Trump taking charge of the Fed a little bit more aggressively by making quite a few vacancy appointments and putting a quell on the interest rate rise. This is something I was talking about, for over a year, that as soon as Trump was elected, they began raising rates simply because they didn't want to be accommodative to his policies. And certainly, you can only imagine if we hadn't seen the rate increases of late, how much faster the economy would have been growing. It's really starting, and I think you're beginning to see some of the signs of it in real estate, as you're getting the stories of it slowing things down simply because the rate rises make it less affordable. And it's been completely arbitrary. I mean, you've thrown trillions of dollars of free money out there, and now all of a sudden you need to collect. It's strange, but inflation still hasn't been a factor. And until that actually turns around, they're pre-pricing in an inflationary bump, but in some terms they're exacerbating the problem. Inflation is going to come from this area, and oil continuing to maintain pretty steady levels. I know there's concerns going forward into the coming years when they're talking about the higher prices. Some of these environmental demands, like for oil tankers and that, having to change out their fuel, those are the things that will cause dramatic spikes, because they're going to create bottlenecks. And it's no different than what we talked about in America, not having enough refinery capacity in a lot of cases simply because we haven't built any due to environmental restrictions in that. So it'll be interesting to see how that stuff plays out. Certainly drilling capacity at these levels is attractive. And they're saying it hasn't still created a significant boom yet in the central part of the United States, but if that starts to pick up, then you could see really significant improvement in growth. So the growth story for America is not behind, but maybe in front if the right policies are implemented. That's causing a little interest back in gold. A decent buy setup. I mean, this is where you get the number twos, where it comes in from, the cross of the green. We got this case orange dipping below, coming off the dip below the red line that was right here. We made lower lows. Didn't quite completely match it. It was pretty darn close though. And of course you see there's the ABO reset. So this one has the potential to do something. The problem you've got is without this steel reset, you get a little wave while it's above the plus 13.5 because that's the equivalent of it coming from below. But once it tips down, not a whole lot there. And if we look at the 5K, it was a nice day. We started out modest, above 50%, got gold straight to the highs. Actually retraced a little bit, got right back down to the 50 again, right here, and then popped back up to the highs. Put in positive extreme, just retraced a little, and then we just traded sideways in weak shakeout readings in DOC, and then we ended up with a new spike buy, which, let's push the bottom line right there, took place just before we were heading down. We got the crossover. It was right here, just about the 76% line, and then that just led to new highs. Then we got gold again just below the highs. That led to a new high as well. We got a conglomerate of markers right there, and we do have positive extreme going all the way back to here at 28.28. That be attractive from retrace, but these early ones got filled back in pretty quickly, and then we started a brand new spike right here, and that shot up and then produced the blue dot right there finally, as we started to see some breakdown of the shakeout from really extreme levels, and then we got spikes well into the plus 13.5. Actually began a little early right there, and then once you start getting to the highs, then it's just a question of waiting for that key breakdown. It's literally right there when you look at the steel dipping below, since you still had cyan well under red. That's the closest configuration you get, would be the opening of that snake right there, where orange rejects steel immediately in a very sharp fashion, and was coming right off the peaks. It just still took a little while. Again, this is what I point out. This is where you're about to match highs, and then the shakeout is creating lower readings. And a lot of times we'll see that it's even much lower, which is even more dramatic. But look, we filled all the way back in to right there. So complete fill-in of the positive extreme series from this initial run. This one was sort of kind of washed out. It still leaves this little teeny one right back over here, but far less significant than these initial blowout ones. Doesn't mean it still isn't going to get revisited. It just, this was a previous high line that we have here from this 2831. But even if I borrow that line, we can go ahead and see right there what that looks like. And see, it's interesting because now it's going to be above the zero line, and still a decent range. I mean, we jumped all the way up to 29 for the Morganacci. So the rising lows is what's pulling this down a little bit, about to get to the 23% just because it's rising, not because of falling price. It looks pretty good. The action, I think, has been very clean for us as far as being able to follow these setups. So continue to go with that. Be prepping indicators for the month of August, and we may actually see some fireworks for August, because it looks like more of this trade activity and international situations may cause a little bit more risk evaluation, which could could be exciting leading up to obviously September when everyone's coming back and the trade gets more active again. So, as always, though, trade well, and I'll definitely put up any charts as they're needed. Trade well.